Good morning, everybody. Welcome to this meeting of the Pension Fund Committee on Tuesday, the 22nd of July, 2025. The County Council allows filming of photography at its public meetings, so feel free to take pictures or share on social media during the meeting. Please turn off all phones or put them to silent or vibrate while the meeting is taking place. There is no fire alarm test today. So if the alarm sounds, I will adjourn the meeting and we'll leave the room by the side doors and use the external fire exit to the assembling point in the car park. Public session of this meeting will be live streamed and the recording placed on the council's website. We will adjourn after 2 hours for a short comfort break, although I think we're actually scheduled for 2 hours. So let us hope we don't go on beyond that. I'm proposing two changes to the published running order of today's meeting. The first item is to take item 6, which is KPMG's audit plan for the pension fund for 24-25, straight after item 4, the pension fund's statement of accounts for 24-25. The second is to consider item 12, a members' engagement survey, which is the last report in the public meeting rather than in the confidential session. The report was published on the meeting webpage last week. So I'm going to ask you whether anybody has any objections to that. We decided that it is really, there's nothing confidential in it and it can be open for the public. But if nobody has any objections, I will take it that that's what we're going to do. So item 1 is apologies for absence and declarations of interest. So would the Democratic Services Officer report any apologies?
Thank you, Chair. There's apologies from Councillor Bowden.
Okay, thank you very much. And does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? I hear no disclosures, so I'm going to ask us to move on to approve the public minutes of the Pension Fund Committee meeting on the 18th of June as an accurate record. And so I'm going to ask if anybody disagrees. For those, yes, oh gosh. Lara.
Thank you, Chair. We had a discussion last time about the ability to put some of the pooling information into the public domain about whether we ought to air that in public or not. I took it not just as a minute, but as an action as well, that we would try to put as much of that as possible into the public domain. Mm-hmm. So I would take that as an action that's missing from the minutes.
Well, I suppose technically speaking, you are right. But in our confidential session today, we will be discussing an update on it. And I think you will see that at the moment, it's still not appropriate to put any of that in the public domain. But I agree with you that as soon as it is possible to do so, we will do so and should do so. So I hope that satisfies you. But does it change the minutes? No, I don't think it does.
Could we have an action in our action log that will happen in future?
Thank you, Chair, through you. All reports are assessed by the monitoring officer before publication. So one of the things that she will be looking at is whether it meets the test for exemption. So that's a standard part of our business as usual.
I'm going to, unless there are any other objections, I'm going to take the minutes as read and I will sign them accordingly. Now we turn to the minutes action log, and do members have questions on that as the action log, as an action log? Again, I'm going to take that as read and we will off. petitions and public questions, and none have been received to date. So I think we can move on from there. And I turn now to item 4, which is the pension fund statement of accounts for 24-25. And I'm going to ask Ben Barlow to introduce the report.
Thank you, Chair. Yeah, you'll notice this is quite a big document, so I wasn't planning on doing a page turner. But if I could make reference to page 20 in the packs, and I'll just talk through the line items there. But if you did want to go into any more detail, I'm happy to take any questions. This is the draft accounts. So if you do spot any little gremlins that have worked their way in, please do. I'm happy to take any of those by email as well, because obviously we'd rather deal with them now than at the stage of the final accounts. But so we'll start with the net asset statement, or sorry, the fund account, which is essentially your profit and loss or income statement. So you'll notice that our contributions have gone down. That's actually as we were expecting to see. There was quite a large deficit payment paid in the previous year. So the figure we're seeing there is in line with what active members and employers, active member numbers and employer rates. So that's a number that we were expecting to see within our range and comes back to within our controls and working papers. So we don't see any problem there. Transfers in is a bit of a demand-led one, and it's probably good to look at this one alongside payments too, which is effectively transfers out. You'll notice there's been quite a reduction on the transfers in. In previous years, we've usually had more transfers in than transfers out. This year, they're generally about the same, so that's had a bit of effect on our cash flow. Benefits have gone up. Again, that is in line with pensioner numbers and inflation on benefits payments. So that is again within our controls and checks, and we're happy with that figure. So that gives us the fund account, a positive cash flow of about 5 million. Once we take management expenses out, which I'll come back to, because obviously that's a key line there, we are then looking to bring in some cash from somewhere else to cover the costs of our management expenses. So that's where we're starting to see our strategy play out. So you can see the investment income has increased. And I think it's note 13 does actually show nearly all of the asset classes having more investment income in. So part of the strategy that we put in place was to bring in certain assets that generate more income over the year as we mature as a fund, and that cash positivity possibly over the next few years reduces to a negative cash balance as the benefits go up and the contributions come down because of the funding level. Going back to the management expenses, on this line, without looking at note 11, it does look like they have gone up, but it's actually it's the effect of the transition costs in there. So the management expenses, and if I make reference to note 12, which later on in the document, you can see there's columns across within note 12. Let me just find the page, sorry. So that's page, what page am I on this one? Page 11 of the pack, sorry, page 29 of the packs. You'll see that the transition costs for the year were 4.8 million. The previous year, there were 441,000, sorry. So that is the big change. And again, that's our strategy playing out as we've moved to a less risky position to as part of the strategy asset allocation and bringing in more income that we're seeing on the net asset statement there. We then look at what we've got returns from our investments. When we add that into the cash balance that we were at following management expenses, we've actually turned a profit for the year of 100 or just shy of 132 million, which I think is reasonably pleasing considering sort of macroeconomic climate and the global factors that we've had to deal with this year. It's not possibly what we were expecting at the start of the year. I think we were expecting maybe not such a positive outturn. So I think that's reasonably pleasing. We have got the investment review later, so I won't go too much into the mechanics around that investment number, because we'll cover it later, and I'm sure you may have questions on that later. So if I may, I'll move to page 21, which is the net asset statement. So this is effectively the balance sheet. So basically, the investment assets are all of those holdings that we have within Northern Trust, our custodian, that our investment managers look after for us. Our investment liabilities are some payments relating to those assets that sort of fell at year end. And then you've got the current assets and current liabilities. And what you're seeing here is basically the debtors and creditors. So there's some accruals in there that make up those figures. So the current assets number of 23, I think majority of that is contributions that were received in April that related to March. So we have to do the accrual process to account for them in the correct period. And the current liabilities figure is basically payments that were due at the end of the year, and it's the same, just accounting for them to be in the right period. So I think that there's nothing in there that caused alarm or was a figure that we weren't expecting to see. We've got working papers against all of these figures that demonstrate we're happy with these figures and they're within our controls and checks. The accounts have been done in line with the SIP for guidance as always. We haven't really changed any of our processes from the last few years, which has seen quite a successful audit. We believe them to be clear of material misstatement. There's one big figure that's got to come in yet, which are those, and you'll hear about them in the next item, those level 3 investments that just take a bit longer to get the true market value. So they're the private equity, property, and CCB is one as well. But I think we've got CCB in there already, have we? Yeah, we've got the first draft, so that figure could still change a little bit. So those level 3 investments, there might be an adjustment. So when Asim comes on from KPMG, he'll probably talk about level 3 investments, and that's an area of risk for them. We will adjust for it anyway. So that'll be the one big change you'll probably see from the draft accounts to the final accounts when they do come. But yeah, it's a big old document, so happy to just open to questions, but I hope that gives you a bit of an idea on the line items we're seeing and some of the story of the accounts.
Thank you very much, Ben. Very, very clear explanation. I look to our colleagues for any questions. Councillor Keane.
On the transition costs, the 4 million this year, so will we expect to see that drop back to the 400k level?
The transitions we were planning on doing, we've generally done. So we're now sort of approaching our new strategic asset allocation that we sort of started work on 3 years ago. But once the valuation is out of the way, we'll start work on the next strategic asset allocation. And also, obviously, there's the pooling issue. So once we get through the pooling process, there'll be a number of transitions to do within that. But I would hope within the next year, there's not as many transitions, certainly relating to the strategy that we've seen over the last year. So we are where we wanted to be now with all the transitions to the strategic asset allocation as it sits at the moment. But work will start on the next one soon.
Councillor Bort.
Thank you. Ben, my question is about taxes. So the fund is exempt from income tax and capital gains tax. And I remember last year questioning, I think it was the first time that we saw appear a line item for taxes, and it's now tripled as well. What type of income is being taxed?
Yes, this is dealt with by the Northern Trust, our custodian. So I'm hoping that is one figure that could still change between the draft and the final as we do tax reclaims. And there's a bit of a lag on doing the tax reclaim after we've got the market values through from the end of the year. So that is a figure that could still come down before the final accounts, but it will be tax reclaims due in relation to dealings in other countries. So some of the paperwork can be quite intense, and sometimes we need a bit of help on translation and things like that. So it can be quite a long process to put a tax reclaim through. Hopefully that answers your question, sorry.
So is this tax on foreign income?
Yeah, that's correct. Yeah, yeah, and a lot of it is the dealing element of it as well as the transactions.
Well, surprising as it may seem, I had exactly this, well, a very similar question, because my understanding is that a lot of our overseas holdings are actually held through UK funds, which then deal with the tax, and we receive the net figure over here. So there isn't a question of tax reclaim on that. So these would be situations where we're holding investments directly overseas and make a claim under double tax relief.
Yeah, I mean, there's lots and lots of different asset classes and funds of funds. So there's lots of different areas it could come in. Looking at Mercer, I don't know if they want to help me on that one. The kind of tax that we're paying over the.
I mean, a good example is transition activity that was undertaken. When that's undertaken between different custody funds, that's held in a custody fund that is directly owned by the pension fund, and so they would be directly paying those stamp duty taxes on overseas transactions and reclaiming them. So there are periods when the fund does directly hold some of those overseas assets. For example, within custody accounts for transitions is one example.
It's probably not in the statutory. Well, it wouldn't be in the statutory accounts, I suppose. But do we have a statement somewhere which tells us exactly what we hold directly and what we've got a figure for global equities, for example. But is that split down between that which we hold directly and that which are held through other funds? I think it'd be quite interesting to know, at least ways offline, as it were, exactly how much is involved and how much tax is involved, or potentially tax, and that could be reclaimed. I mean, obviously, the figure that we've got here is an estimate at the moment. Presumably, it gets firmed up and is recognised when the claim is actually effected.
Yeah, but when we come with the final accounts, I mean, every one of these line items, we do a sort of quite in-depth working paper for to provide assurance to the auditor. So yeah, every number in here has got that sort of background behind it.
Any other questions? I think you also answered one of the questions that I had is, what to the extent that any of these figures are estimates, and you've identified quite a number. Well, asset 3, level 3, as potentially changing. It would be impossible to say by how much. I mean, what sort of variance could you be expecting?
Yeah,
I mean, Capital and County, for example, much.
yeah. So we've done the estimates are done in line with the way SIPA say we should do the estimates. There will be a move. You can't really say until we get the actual figure. It may be material, it may not, but either way, we would adjust for it. So if it is a material misstatement, it will be in the auditor's report. If it's non-material, it may not be, but we would still adjust for it so that the final figures that you'll see in the accounts will be the correct level 3 figures. Other funds may decide, well, it's not a material change, so therefore we don't need to update it. That's not how we generally do it, to give us a nice clean audit and an audit findings report. So whatever the change is, we will be adjusting for it.
Okay. Thank you.
So in the report, you compare the previous year to the year being reported on. We have more members, but we have a decrease in contributions. And you've identified 2 sources of that: one, exit credits, and the other one, prepayment of secondary contributions. I understand exit credits. Can you explain what that means, prepayment of secondary contributions?
Yeah, so when the valuation takes place, every employer, they work out the contribution level that that employer would need to pay. In some cases, there's a secondary contribution, which is a deficit payment which needs to be paid. So usually that's done by by invoice, and it's paid sort of could be for the 3-year period, but it'll be received in one of those 3 years, and we have to account for the year it's received in. So this was a deficit payment on contributions as agreed at the valuation that has been accounted for last year. And it was quite a big one for one of the big employers, which is why it's actually sort of shifted the numbers. If you was to take that out, we look at the numbers of active members, and it's in line with where we were expecting to see the contributions figure.
Okay, if there are no further questions, let's move to the recommendation, which is to note the draft statement of accounts for the pension fund for 24-25. We're in accord. Thank you. As advised at the start of the meeting, we're going to go to item 6, the KPMG audit plan, and which actually follows pretty well from our last and previous report. So I'm going to ask Asim Iqbal, who I believe is on Zoom, to make a short presentation.
Good morning, Chair. Can you hear me? Good morning.
Good morning, Mr. Iqbal. Thank
Good
you for
morning,
joining
Chair.
us.
Can you hear me now? Sorry.
I can. We inadvertently turned you off before. I don't know whether you heard anything that preceded this.
No, I was able to listen to but I think you might not able to listen to what I was saying. So, good morning,
Okay.
everyone. As Chair introduced, I'm Asim from KPMG. I'm here to present the audit plan.
Please. Yes.
Thank you. So I'll go with it's page 75 of the committee papers where the audit plan is. So I'll basically take the plan as being read, but I'll briefly go through in terms of some of the key messages in the plan, and I'm happy to take questions as I go along or at the end. If anyone have any questions, I'm happy to take those questions. So obviously on page 76, it kind of starts with the introduction that KPMG are being appointed by public sector audit appointment as part of the tender. So we have this tender for 5 years. This is the second year in terms of the work that we're doing with the pension fund and the county. This plan specifically is for the pension fund. In terms of the page 77 of the report, it details all the materiality levels that we have. So you can see pretty much the materiality is not significantly changed from last year. The only thing that the significant change is the performance materiality. That is because as part of the first year, we used the 65% threshold, whereas now because we have done the work with the management and we understand the processes in a better way coming to the second year. So we have increased our performance materiality to 75% of the materiality. So that's why it's increased from 27 million to 36 million. The materiality numbers are being set at the gross assets of the pension fund. In terms of the page 78 of the report, this lays down briefly the timings of the work that we are planning on doing. So obviously to date we have done the planning work with the management. So obviously Ben, Mio and the team are being very helpful in terms of providing us the information that we need to do the planning stuff. Obviously we are presenting the plan based on the planning in this committee, and then over the next couple of months in August and September we will be doing our year-end work, and then we are hoping that by September we'll be in a position to then do the majority of the work. Obviously, in terms of the deadline again this year is 27th of February 2026, but we are aiming to be in a position by September to have significantly completed our work. But as the pension fund accounts are the accounts which are group accounts with the county council, so we have to wait for the county council team to be able to done with their work before we put pen on paper. But we'll make sure we'll keep the committee updated in terms of the progress that we are making throughout the audit. In terms of the specialist, obviously, as part of the work, we engage our internal specialists that include our iRadar team, which help us with the valuation of all the investments. Then we engage our corporate finance team. They are the specialist team who help us with the valuation of the Counties Bank, because obviously Counties Bank is a significant risk, and I'll cover that one on the next slide. Then we have our IT team and our actuarial team who help us with doing the work as well. Moving on to the page 79 of the report, that lists down the significant risk and other audit risks that we have as part of our work. In terms of the significant risk, the first one is the kind of mandatory risk as per the ISAs, which is management override of the controls. Obviously, because of the unique position of the management, we make sure any postings which are being made by the management as part of the accounts process, we look into that and we thoroughly examine all the journals, and we kind of use a high risk criteria to make sure that the journal posted by the management during the year are legitimate journals and there's no fictitious journals being posted as part of the financial statement. The second significant risk is around the valuation of Cambridgeshire and Counties Bank. Obviously, there's a lot of estimation involved in terms of valuing the bank. That's why we have that as a significant risk. And we have our corporate finance team, which is kind of a specialist team. We engage them to help us do the valuation of the bank. In terms of the other audit risk, obviously being the pension fund, we focus on the investments, and we, as part of our work, we go to all the third parties, means all the custodians or investment managers, and directly get the confirmations from them. And then again, in terms of the valuation, we have our specialist team, iRadar team, who look into all those statements and make sure we value independently those valuations. So I know when I joined, Che, you were asking a question in terms of the level 3 valuations and the estimation involved. Obviously, when management are drafting their financial statement, they're up against the time, and sometimes they might not get the latest available valuation. However, when we are doing the auditing, we have a bit of more time between the year end, and when we do our work, we go to all the third party fund managers and we get the latest valuation reports. And if there is anything which is materially different, we discuss with the management. And based on our experience last year with the management in Cambridgeshire, they're being very helpful in terms of adjusting those level 3 adjustment at the year end. I'll take a pause in here if there is any question from anyone before then I move on.
In the absence of any other questions, I'll ask a question on management, the risk on management. To what extent do you work with the internal auditors and take note of what they have to report? Because they have done some reports on the pension fund.
Yeah, so obviously as part of our work, we engage with the internal audit team. We set up a meeting with them. We understand from them in terms of the work that they have done, and then we request their reports as well. So as part of the work that they have done, we look into all the work they have done and the recommendations that they have made. So that all kind of factors into the risk assessment procedures that we do. However, we do not directly rely on any of the work that is being done by the internal audit. So I think that the distinction is, yeah, we use their work to make sure all the risk assessment procedures that we do, that feeds into the work that's being done by internal audit, but we do not directly rely on on any of the work that's being done by internal audit.
Fair enough. Thank you. Any other questions? Perhaps a leading question as well on Cambridgeshire and County. No detail, but the work that you have done to date doesn't, this is a question, doesn't reveal any issues that you wouldn't have expected to date. I mean, clearly you're going to have to come to a final decision, but there's nothing that has alarmed you or suggests that this might even be a higher risk than you've suggested in your table.
I would say no for now, because obviously as part of the work that we have done to date, we have done the planning and the risk assessment, and we have done the understanding of the business processes. We have done the walkthroughs with the management. So based on that, there's no significant changes from prior year in terms of the actual business processes. Obviously, as part of the year-end process, we now started to get the information from all the third parties and fund managers. So we'll make sure if there is anything, we keep the committee posted. But to date, there is nothing that I would flag for the committee's attention.
Thank you very much. Any other questions for Mr. Iqbal? Up to the point at which he's presented, I'm going to ask him to continue. Thank you.
Thank you, Chair. I'll go through because from pages 80 onwards till pages 87 is mainly explaining the detailed procedures that we are doing in terms of each of the risk, and I briefly explained that, but I won't go into detail. I'll take that as being read. Moving on to the appendix, the two main things I would then focus on in terms of the audit team, obviously is the Sarah Brown is the partner responsible for signing. I am the senior manager on the audit responsible for managing the operational elements of the audit. And then we have our in-charge Jipneet. She's basically responsible for doing all the detail work. And then we have all the supporting team. So in terms of the team, there's no significant changes from prior year. Then in terms of the page 92, where we list down the fee, in terms of the fee, again, this is being agreed as part of the PSSA agreement. So KPMG or management have no direct kind of negotiation as part of the fee. This is all done as independently. Obviously, one of the things that we do as part of the work is we report to the auditors of other admitted or scheduled bodies where they request us to do additional work on the behalf of those employees. Obviously, that work goes through detailed scrutiny by PSSA. If there's any additional fee, we have to submit all the supporting evidence to PSSA, to the management. And my understanding is that management recharge that fee back to the employees. But to date, we have received 7 letters, but I'll make sure as part of the September committee, I'll present to the committee in terms of how much the work that we have done in terms of those letters, or if there's any additional letters are being received, and what will be the rough estimate of the fee. But again, that fee then goes to PSSA and they go through the whole process to approve or disapprove. We are still going through the process for prior year in terms of providing all the supporting evidence to them. So that fee of like 48k that is in this page 92, that's still in discussions with PSSA. Then in terms of KPMG, obviously the audit team is independent of the work that we are doing. There's no concerns or independence issues to flag as part of the work that we are doing. So those are the 2 appendices I thought worth kind of summarizing for committee's attention. Otherwise, I'm happy to take any other questions.
Open to members. Turning this thing off. Mr. Iqbal, thank you very much indeed. I'm sure that we will be meeting you again when you've got further down the line with the audit, and we may have some questions at that point, particularly if you're telling us things that we perhaps don't know at this stage. But thank you very much for joining us this morning, and wish you well continuing the process. And as I say, we look forward to seeing you on the next occasion. Thank you.
Thank you, Chair. Thank you for having me.
We're going to, I don't think we have to do anything on this, do we? Well, I think it's just simply noting the audit plan. So can I ask again whether there are any objections in noting it? No. So we can then move back to item 5, which is the business plan activity update. And I'm going to ask Mark Whitby to introduce that for us.
Yes, thank you, Chair. We don't normally bring a business plan update to this annual meeting, but there was one element we had to, which was the determination around McLeod. There's also an opportunity that arose to get some support on unprocessed levers, so that worked with this time. And while we were here, I felt we might as well update a couple of the activities which clearly were now out of date following sort of like changes in the wider landscape.
This was my fault. I should have mentioned this, that there is one part in this that is exempt. So if anybody wants to ask any questions about the exempt part, I'm going to ask them to defer it, or to tell me that that is the case, and we'll move it into the exempt section. Should have asked that before. Apologies.
Yeah, thank
Interrupted you.
No, that's fine, and thank you. I was just going to say it's the actual cost which is the confidential part. So as long as we don't discuss the actual cost itself, we are happy to discuss that support. So in terms of the determination, you'll be aware from our business plan that the McLeod project was always going to span into next year as well. It's never been the case that it would be finishing this year. What happened a few months back is it became clear that there was a process of getting agreeing formally to extend if you wanted to go beyond 2025, and so that's what this is. There was discussion with funds at regional meetings, and funds are some are deciding to come to their committees, some aren't, but we felt it appropriate to come here. And what we've done is in the appendix, and I think this is an important point, is we've set out how each element, where we are with it, and what we believe the timescale is to complete. So broadly, in the first appendix, it shows that the first category we are complete on because our system has been operational from October 23, processed in accordance with new regulations, so that's fine. The final category of the 3 categories are going to be dealt with through annual benefit statements. So we will mainly be there'll be a fraction of a % where we may have issues. And this is where there are particular quirks of the record, like things like pension debits on there, or certain tax situations. It might mean that we can't 100% put on there what we want. And there's also some cases where we want to do some quality assurance on the numbers as well. So, but broadly, bar a fraction of a %, we will be there on those as well. So the middle category is what we're working on right now, and that's where we are actually physically rectifying things that have already happened and need correction. And so the category, for example, that we are doing at this very moment is people have already received the pension. We've issued letters to individuals to give them the option as to how they want to take the additional uplift, be split between pension and lump sum. Prior to that, as you're aware, we did a lot of work going out to the whole membership saying, have you got any other service to bring you into scope? The most sensitive category, which I think is just putting this into context, is where people have passed away, and sometimes their dependents have passed away, because it's obviously looking back up to 2014. So there's there's an awful lot of sensitivity around that, and we are actually still waiting for some central comms around that to move forward. So that's McLeod. Just seeking that with noting that we're going to put in place that determination. The 2 substitute activities I think are fairly fairly straightforward. We understood that we were going to have to do some work around survivor benefits to rectify those through something called the Goodwin case. When the consultation came out, which included that, it included a lot of other things as well. And so what we've done is we've broadened the scope of that activity to include all the rest of that, the things that are likely to come through at the same time. Still some uncertainty because obviously this is a consultation that's only just been responded to. But you can see that listed in section 3.19, survivor benefits, pension, gender pensions gap, opt-outs, forfeiture, etc. So that's widened the scope of that activity. The second activity we've changed is the one around building, the Access building an FCA regulated entity. Clearly, Access will not be able to build an FCA regulated entity because it hasn't got the support of government. And so the activity has been changed to determine and join an alternative asset pool. And we'll discuss that towards the end of this meeting. And so finally, the opportunity that arose, resource is very tight in local government pensions terms at the moment because of everything going on. And that's not just within funds, that's actually suppliers who provide additional support as well. However, we were approached by Hymans, who we obviously already have pre-existing relationships with. They have got a window to do some support from us if we wanted to take it up. So it's a very modest amount of cases, which is 1,000 of our unprocessed leavers over an 8 to 12 month period. It would clearly span into next year. It would likely start, hopefully, so we could start in the final quarter of this calendar year. So we get 6 months in this year and the remainder in the following year. The costs are set out in the appendix. They are competitive. They have been supporting another fund I've been in close discussions with about how that's been going. They went through a competitive process and Hymans won through, and we have got access to those costs as well. We are aware when we've done it before, we've seen much higher costs per unit than what's quoted in the appendix. There are the access to it would be through, we've got two routes actually. One, we've got an existing contract, and the alternative is a direct award for such a small amount through a framework which they are on. There are other names on there. There's only probably one or two other viable names on there. We've tried using one of those before, and we wouldn't want to use them again for this. The other issue that arises is access to the software system. Hayward do not allow any provider in access to it, particularly if they are a competitor to Hayward. We are aware that Hymans would be fine to have access, so it works from that perspective as well. I mean, that is a real risk because I'm aware of funds who have gone through competitive processes, appointed someone and not been able to utilise them because of their software supplier. So I think it's an opportunity that I would like to take up. It would clearly help accelerate the processing and put us in a better place, come what may, for pension dashboards in particular. Sorry, Chair, that's
Thank you very much, Mark. Thank you. Open for questions.
Thanks, Chair. I'm not entirely happy that we're having to outsource what sounds like fairly routine work, and in my experience, it's almost always means additional costs when you start having to outsource things to private contractors. Was I right in thinking that it's because of the good deal of extra work that's coming on because of all the uncertainty about where the access pool and so on is going that we haven't got the resource in the resources that we get from, well, I guess it's West Northamptonshire's employees, isn't it? I haven't quite got a handle on it reading this, quite how significant this amount of work is. And if you're saying it's very small, well, fair enough. But I'd just like to put on record I'm a little bit uncomfortable with that.
Yeah, I mean, I think we recognised that this was well, certainly this year is the worst in terms of amounts of things we've got to do. It looks like next year is going to be equally as bad now, particularly with the access and fairness consultation. And there's a lot to retrospective looking at records. So I think we've got a very tough couple of years. We did, if you recall, on this particular aspect of work, say we would not do as many this year as we would next. I think we now probably got pressure on, as I say, extra pressure on next year, which we didn't have it when I set that business plan back in March. So it's about in a very straightforward way, being able to accelerate that purely because an opportunity's arisen. To get people in and to train them takes a couple of months to get them in. It takes months to train them. They could one or two, sometimes then leave. What this does is it passes the risk of that to that supplier. They've proven they can do it in the past. Clearly, there's risk with them as well, but that's in the worst case scenario, we simply wouldn't be paying them, and they wouldn't do the work. So I think it's feels fairly low risk. And if we can put ourselves in a better position for dashboards, having more records processed and in the right position, then I think that's a positive thing.
Do you want to come back, Councillor Back? No. Yes, please.
So I noted that this only accounts for about 25% of the backlog. Why are we choosing to do 25% and not more to clear the backlog? I'm not sure how much of this is exempt in the paper, so I'm trying to use my words carefully.
So their capacity is dictating the volume. If we wanted to go out and do something larger scale, then I'd be going out for effectively a procurement to do that. This was simply, I mean, as a committee, you accepted the 1,000 as being, whilst you wouldn't necessarily, you'd like it to be done quicker, clearly. That was an acceptable pace to you. This is obviously, it should increase the pace, all things being equal. There are clearly pressures coming in from all over the place within the service at the moment in terms of the amount of activity we want to do. But what I would like this to be is additional and additive to what we were going to do anyway. And just to give you a reassurance, we have got people allocated to doing these at the moment. They're not doing other things. So it's really what capacity that supplier has.
So Davenport Ray.
Thank you. On the same topic. So have you assessed the cost versus the benefit of employing a person to do this? I mean, I'm concerned about the number as well. And you mentioned that in next year, we also see some challenges in the business plan in terms of getting that 1,000 done every year. If we were to employ someone to work on that 1,000 every year, who was a consistent person, and the cost of that versus what's proposed here in front of us, have you compared the two?
Well, I mean, clearly it is cheaper to bring people in-house, and our process has been to bring people in-house and build up a project team to deal with the projects rather than outsource it. What's happened is the number of projects has, because of there was a stall in the government agenda in terms of what they were pushing through, and what they've effectively done is push through everything all at once, and there doesn't seem to be any stop to that. As we've seen from that latest consultation, it's happening not just within the admin side, it's happening on the other side. So we're expecting things like TCFD to come through at the same time as all the pooling agenda, for example. I think we're quite weighty in terms of resourcing and in terms of what each team leader is supporting at the moment. So it's not that easy to just add in one or two extra individuals, and also find because the other side of it is the capacity to check the work that's being done as well. And so that is a real pressure point. We can probably easily get people in to do the work, less so to actually then quality check it and make sure it goes out correct. So it kind of helps with that as well. So I think we'd struggle to get extra people in to do this as easily as we can to just outsource it. and what is a fairly reasonable cost. The other risk they're also taking is if there are even more complexities, then some of that cost would clearly be absorbed by the supplier as well. So we've got that risk being taken care of as well.
Can I just check that the 1,000 being proposed outsource here is in addition to what is in the business plan by your employees?
Yeah, well, that is the intention, absolutely. So it's, as I say, it's additive is what the intention is. As you're aware, we can in any given year underperform on our own activity, but we keep you abreast of that during the year through business plan updates. So next update will be at the next committee.
Just to check, so for this exercise, we're paying for outcome, not for time that they're going to take to do the work, as in, so we're paying and they will deliver. There's no risk to us that they won't be able to deliver, they won't come back for more money.
They've drawn a distinction between straightforward and not effectively non-straight, more complex cases. We are not going to give them ultra complex cases because that would not be beneficial, because the reality is there's certain cases which you need probably an incredibly skilled skill set. So we will retain those. We will analyze the cases, make sure we give them appropriate cases. But then the unit cost is what we're effectively paying. So yeah, it's up to them to obviously complete them at that cost.
I think it was inevitable that this particular item would come under scrutiny. And for what it is worth, I've also asked some questions and satisfied myself on the following matters, which is, first of all, that Harman Robertson is clearly a strategic advisor, a high-level advisory company, and most of this work is fairly operational. So, do they have the people to actually do that level of work rather than sort of charging out at the probably much higher rates that they would normally charge for advisory work? And second of all, are they insured to do it? I mean, are they competent to do it? And thirdly, are they contracted to do it? Is it within their existing remit? And the answer to all of those questions is, in fact, yes. And I was satisfied that it is appropriate for them to take on this work and relieve the team of what is quite a substantial backlog, and which will obviously release them in future from that particular task. So, I'm satisfied myself that it is correct and appropriate that we should proceed down this route. If there are no further questions, I'm going to move to the vote on this. And I think I'm going to take it, because there are three sections of it, I'll take it all together. But if somebody objects to the last one, then we'll have to look at that separately. But let's try and see what happens when we go to the full motion. The committee is recommended to note the proposed determination decision to extend the McLeod implementation phase by 12 months for certain qualifying members set out in paragraph 312 to 313. Approve the substitute business plan activities set out in paragraphs 317 to 321, and approve the utilisation of the Harman Robertson to support the clearance of 1,000 unprocessed lever cases as set out in paragraph 322 to 325. So I'm asking for your approval of that. Everybody, are there any objections? Thank you very much. So that recommendation is carried, and we move on. Then we're going to move to item 12, which is the engagement survey. Now, I've got to open my engagement survey because I haven't got it here. It was originally proposed that this report would be exempt, but following a review, we considered it as part of the public session, and a copy was published on the meeting webpage on 16th of July. Ben Barlow is going to introduce that report for us. Thank you, Ben.
Thank you very much, Chair. So the covering report that we've got in the pack really has some of the rationale and strategic importance of conducting a member survey, which was agreed at a previous pension committee, and is also in our business plan. But the idea basically though is to gather member views on the fund's RI policy, to inform future strategy and improve engagement. The survey is in Appendix A. If it's okay, I'll treat that as read in the interests of time, and just move to the recommendations, which are to review the member engagement survey, approve the content of the member engagement survey for circulation. One thing I did want to pick out is in 3.3, and it's around how we're going to get this survey out there to the people. So there's a digital link which people can access on their phone, website. We'll also put it onto our pension systems as well, and hopefully that is to sort of increase uptake. I did get a question in the week from Liz on what sort of uptake we've had previously. I spoke to Corey, our employers manager, who's done similar surveys, not necessarily on responsible investment, but there we were looking around 7 to 9% he's getting. But hopefully this is a more interesting subject to many, so I'm hoping we will get close to 10%, but hard to say until it actually happens. So wasn't going to go into too much detail, and happy to open up questions on the actual survey itself if there is any.
Thank you, Ben. Ms. Brennan.
Yeah, I've just got some questions. I saw in section B, it seemed to be directing the answers to having a binary choice between responsible investment and having kind of the best returns. And I just wondered, I just thought that it shouldn't really be a binary choice, because then it doesn't bring in the nuance about, having the best of both, which is often what we aim for. And the other question I had reading through, I thought some of the, it's, should we include some option as a don't know? Because I just wondered whether it would be off-putting if people actually don't know. And I think we're also assuming that our pensioners or our, members actually do know about how the scheme works and that we do have investments. I just wondered whether there should be a bit of a introduction that explains that, because I really think that for some people this will be over their heads, and we don't want that. We want to have valuable information, really. So a bit of a preamble would help people be able to respond and get us some good information back.
Ms. Brennan, are you?
Yeah, I just had another.
No, carry on.
Right, there was another. I think it's D1. No, it's the question where it's the long question where you have to select 5 options out of, is it 17? I can't find it now, but I just thought that was too few, because I didn't think that enabled you to get a nuanced position. You could either choose to, support gender equality, good healthcare, quality education, decent work, reduced inequalities, for example, all of which I would like, but I would also like to support, the environment as well. So just a bit of nuance there, or else we don't have that nuance in the questions. Thanks.
Very much. Very useful points. Thanks.
Yeah, so on the first point, certainly an intro is something we can certainly add in. That makes a lot of sense. Around sort of some of the wording, and we sort of did identify that we could probably go through this and maybe build in a bit of plain English to a lot of the terms. There's still some sort of acronyms in there that we will want to remove, and some of the complexity around the terms used. I think we can simplify a lot of it. That's certainly something we'll be looking to do before it goes anywhere. But really, we just wanted to check around the sort of materially, is this the right issues we want to question? Certainly on it's D3 was the one where we asked to select a number of points that might be more valuable. We can certainly change that to select as many as you see fit, I suppose, or increase the number. That's 5 at the moment. We could increase that possibly to a higher number.
First of all, I'm really glad that we're asking our members these questions, and I'm really interested to see the feedback, but sad to hear how low the return rate has been in the past. But I do have 2 concerns. One of them is similar to Liz, which is about the reading level of the questions. So the average reading level in the UK is 8 years old. This wouldn't pass the 8-year-old in my household. When I think about the employees in my organization, some of them will be all over this. They'll be very interested, and some will be confused enough that they won't complete it. So that concerns me. The other one is about how we're going to get it to our members. You mentioned online or via the portal. We must know which members have opted out of email updates and specifically requested paper statements. I wonder if it's possible to send them a paper survey if they've identified themselves that way. When I think about the age range of our members, I think that might make up a significant proportion that would probably quite like to respond.
I think, if I may, Chair, sorry, the most popular category of member is actually pensioner on our portal. Yeah, we've also got the ability to, for example, notify employers so they can advertise it as well and things like that. So we'll try to absolutely maximise it. But yeah, points taken.
Well, I totally support the idea of the survey. I'm really concerned about the take-up levels at 7% or 10%. I'm not clear in my own mind how the results would be valid to give us any real information. And I'm just curious about your comments on that.
I think ideally we'd love it to be a higher number. Whatever we do get as information isn't going to, it's only there to really guide some of our understanding when we're doing our RI policy. It's not necessarily going to form the RI policy on its own. It'll just be one factor that's built in. But I agree with, ideally we'd have a much higher number. We could have a much better idea of what is important to our members.
Councillor Black.
Thanks, Chair. Yeah, I mean, on the amount of feedback we're expecting to get, I think we shouldn't be too worried. I am expecting it to be low. I sort of know how many things that I should be feeding back to, and then I miss a deadline and it doesn't get in, and I think I really should be feeding back to that. Just to clarify, we're surveying both our people who are working at the moment paying into the pension and people who are getting their pensions. And yeah, I mean, I think we have huge trouble actually contacting people to get their benefits paid a lot of the time, don't we? So, I mean, there are going to be people who we just are not going to contact here, and lots of people are not going to come back. But I don't think it stops it being a worthwhile exercise. And I'd certainly echo what Liz said about the 5 out of 17 points, because I was thinking if I was answering this, it's very difficult to say, well, hunger isn't important. There's number 2 there. You think, well, how can I just prioritise, say, the workers' welfare one above that? But we're probably going to have much more that we would want to do in terms of ethical investments about workers' rights and so on than we are about hunger, in that we're probably not investing in that many companies who are deliberately making the world more hungry, whereas we are investing in lots of companies who are deliberately making their workers worse off. And so, I think it's a bit strange, the way, how do you, just thinking about, if I'm here answering this, how do I answer it? And I think it probably would be better to say that you can tick as many as you can. And I mean, I think quite a lot of us might say, well, I want to tick all of these. You know, they're all pretty important. And yeah, okay, thanks, Chair.
Thank you. I'm just. Yes, please.
Sorry, just on that point about the 5 from 17, it's the point Liz made was a very good one, very sensible, and you could prioritise them in some way. I think you have to be careful if that you're getting a low sample size and then you make it very, very large, you just end up with a meaningless piece of information. In that, if you get 2% take up and they all say 17 are important, what does that tell you in terms of how are you going to change your policy or objectives? So I think you have to be a little bit careful when designing a questionnaire such as this, in that you're not trying to preempt what the results are, but you want the results that come out to be actually useful and give you some helpful guidance. And so there's a danger that you try and put too much information in there, or you get too much back and you can't simply statistically analyze it because it's not significant. So that's just a point to be aware of.
Thank you very much. My observation really is that there's always a problem with surveys because they are self-selecting. People that respond to them are the ones who have particular interests, and therefore you're very likely to get some biased responses. And I think I can imagine at the moment that there might be some particular responses on some of the RI areas as well. And you know, they may be the majority of those who do actually respond because they're interested. So the trick of this is going to be in its analysis, but I think we also have to remember that it is advisory. We are not bound by anything that we receive, and it does give us an opportunity to get a feel of what people are thinking. So I think it is a worthwhile exercise, even though the response seems to be low. And my understanding is, in general, even in polling, you know, political polling and so forth, response is not always, we wouldn't expect 100%, but 10%, if it were a reasonable sample across the board, would actually reflect people's views. I suspect that there will be biases, but we've got to try and eliminate those as much as we possibly can. I think Ms. Brennan's points are well taken. I think if we can modify the survey, and it's not too late to do that, then we should, because that will give people the best chance to of us getting a reasonable response. We should promote it as much as we can, and it should be as wide as it can, but we've got to remember that we are going to get people who are interested rather than people who are just happy to receive their benefits and put it in their pockets and forget all about us.
Just another question. What will the timetable be?
Depends a little bit on when the starting gun goes. So if we have to take this away again and adjust it, which we will, because I think they're all valuable points that have been made. That'll mean we obviously need to tweak the report, possibly bring it back here again, which is something that you can decide now whether it can be agreed in principle with its sort of the questions we're putting, and you can agree it in principle, or would you like it brought back with those changes we've discussed in it? That will obviously put the start time back, but we would hope to have something. I think initially we were hoping to have something by the end of the year so we could build it into some of the strategy work that we're doing following valuation.
Personally, wouldn't have thought it needs to be brought back, but I'll hear views from everybody because it's a slight modification, isn't it? And the points have been taken.
I definitely don't think it needs to be brought back. We trust our officers to take our comments on board and make it right.
Go on again. In that case, let's move to the report recommendations. Committee is asked to review the member engagement survey and to approve the content of the member engagement survey for circulation. That's the word, but as modified by our discussion. Can we do that? Is that within the rules?
I think, Chair, if you want to amend the recommendation in any way, you will need to move it and second it. But I can just record in the narrative of the minute if people are happy that is what will happen.
Thank you. Yeah. So we approve that recommendation as modified. Okay, we're doing quite well for time for a change. The remaining agenda items are exempt from publication, so the committee will need to decide whether to exclude the public and press from the remainder of the meeting. Sorry.
Sorry, Chair, the mistake is mine. I haven't put on your briefing note. There is actually the agenda plan to look at in public session. The mistake was mine. I didn't put it in your note.
So I think it's item 7, isn't it? No, no, it's not. Where are we? Page 105, the agenda plan. My thing has switched itself off. So. Bear with me. And I thought we were doing so well for time. You've got it up there, Alison. I'll get there in a minute. I'm there. Who presents this? Is it? Okay. I've now found it. Has everybody else found it? Sorry, page 105. Really, it's a question of, do we accept this agenda plan? It's nothing unusual in it. It's what we would expect. Obviously, we're going to be reviewing performance as we normally do, activity, and as we are required to do by the regulations. So if there's no objection, let's move forward and accept the agenda plan. Noted. Thank you. Now I'll do what I was going to do before, which is to tell you that the remainder agenda items are exempt from publication, so the committee must decide whether to exclude the public and the press from the remainder of the meeting. The exclusion will be on the grounds that the reports contain exempt information under paragraphs 1 and 3 of Part 1 of Schedule 12A of the Local Government Act 1972 as amended, and it would not be in the public interest for this information to be disclosed. That is information relating to any individual and information relating to financial business affairs of any particular person, including the authority holding that information. If we are in agreement to support the recommendation to exclude the press and public from the remainder of the meeting, please indicate if you are not in agreement. If you are in agreement, that public and press should be excluded, then there are no objections, we will continue. The committee has resolved to move into private session. We will now close the public session of this meeting and the live stream will end shortly. So there's going to be a few moments break while that happens. And I'm going to suggest that we just take 2 or 3 minutes comfort break for those who might need it.